let's look at what's involved with running your own super fund. Now, SMSFs can have up to 6 members. So as a member of a fund, you're also a trustee and therefore responsible for deciding when, where and how you invest. Now, a self-managed super fund is a form of a trust. It has its own ABN and tax file number, and any transactions relating to the fund must be kept entirely separate to any other entities you may have. Now, the fund must have its own bank account, and typically the very first transaction that occurs within an SMSF is the initial rollover or a contribution by a member. After an SMSF has been established, you can arrange to transfer any existing super to your new fund by initiating a rollover on MyGov. On an annual basis, your tax agent will need to prepare a full set of financial statements and lodge an annual return with the ATO. As a trustee of your fund, you're responsible for initiating investments and keeping copies of all fund-related documentation for the annual audit. To ensure the integrity of the fund, an independent SMSF auditor will need to undertake a comprehensive audit of the fund every year. Now, they'll audit the fund legal documents such as the trust deed to ensure the activity within the fund is in line with the deed. Now, if they identify any issues in your fund, they'll give you a qualified audit report and you'll have to take urgent action to resolve them. Now, with an SMSF, there are 2 types of accounts. When you're still working and contributing to your super, you're in accumulation mode. Accumulation accounts are taxed at a maximum of 15%. Now, pension accounts are used by those who are typically nearing or have reached retirement. And the benefit of a pension account is that any income earned in the fund and any capital gains on these accounts are entirely tax-free up to the first 1.7 million. Now, where a fund has a member in accumulation mode and a member in pension mode, a qualified actuary will also need to be appointed every year to provide the fund with an actuarial certificate. This will calculate the tax-free portion of the benefit that the fund can enjoy. Now, with an SMSF, you can select your own investments or you may choose to engage a financial advisor. For complex situations, you may also choose to consult a tax or a legal specialist. So as you can see, with an SMSF, there are quite a few people that you will need to work with to make sure that your fund is managed properly. So it's vital you appoint the right experts around you to ensure the future success of your SMSF.